Questions for mastery.
Hi, guys. Welcome to the live. And you are listening to Burr Cashflow Investors Live. And every single week on Mondays, Wednesdays, and Fridays, we do a Q&A and we try to answer some of the questions. So we had a bunch of questions that came in, and I'm probably not going to be able to get through a lot of them, but I think I can get through some of them. Here we go. So before we kind of jump right into it, I want to congratulate a few people. So yesterday, John Pazzulo was here, and John Pazzulo, he's from Mastery, property number 45, right? Refinanced. So this is exciting for him. Want to congratulate John Pazzulo. And Joanne was here, and so it's John, Joanne, and his daughter Amanda now is buying a bunch of properties sitting in California. So she lives in California, does lending, private lending in. Oh, Joanne, yeah. Joanne's daughter and son are buying properties also. So it's exciting, but it's kind of exciting because I always pick on John because John's got no hair left now, right? I'm like, it's old accountant, basically buying properties like it's going out of style. So it's always exciting to see when, these are people now I have known 2000, maybe 17, 18, right? Each year, adding properties, growing that portfolio and growing the cash flow, which is what it's all about, right? Because life is about one thing. You need to have more cash flow coming in than goes out every single month. That to me is real wealth, right? It's not how much money you earn. It's not because earned money gets spent. So all that matters is number one is how much cash flow do you have coming in? Is it way more than what goes out every single month? So for John, it's accounting is his full-time gig, right? And then real estate is built a nice little empire for himself and for his daughter at this point with Joanne. So it was kind of exciting to see him in the office and pick on him a little bit. Now, having said that, what do you say? No, not his. No, with his daughter and Joanne. I didn't say his daughter Joanne. So, okay. All right. Having said that, so let's jump right into it. So hopefully, most of you guys have the plans laid out for next year. I know I do in terms of how many flips, how many rentals I'd like to achieve, how many long terms, how many properties that are going to go towards Airbnb. We'll quantify those in terms of numbers wise, at least how I'm looking at it, why I'm looking at it, what I think should be a way of looking at it for you. Depending on what your goals are. All of our goals are going to be a little bit different. Wants are going to be a little bit different and different stage of the journey. But we'll do that and we will do a recording of that for the new year. So watch out for that in the next few days. But having said that, let's jump into it. So the first question was, what is better? Is it better to buy a property for cash or with finance? So the answer for that question is, it depends. It depends, meaning, how much cash do you have, and are you intending to do anything else with that capital? Now, if you have a lot of cash, let's just say hypothetically, let's say you have $600,000 sitting in cash, and you don't know what else to do with it, or you have had it deployed in the stock market. Well, I mean, you could buy properties in real estate and today get a nice 25% cash on cash return. If you know what you're looking for, you can do that in real estate all day long. On top of that, you can do accelerated depreciation. So you're going to get a heavy amount of write-offs on your taxes. So now that bumps up your returns even more, and then hopefully over time the property is going to appreciate, so that adds to your returns. So you basically get compounding effect of it, because hopefully you borrowed a little bit, of put some sort of leverage on the property. So it depends on what you're going to do, meaning what is your time value of money and where else can that money be used to use it for a return that is higher than anything else. So for me personally, right, I don't own any stocks at all whatsoever, period. I don't have a 401k at all whatsoever. So I buy properties, I get them paid down, and basically to me, lots and loads and loads and loads of real estate is security, because they're all properties. Basically, a lot of them will be completely paid off by the time the day I decide I want to retire. So there's tons of cash flow that comes in. There's tons of cash flow that comes in from all the rental properties, so on and so forth. So it depends what your goal is and how you want to deploy your cash. Now, having said that, I only have one stock, right, that I have money tied up in. At the time when I bought it, it's a Class A share of Berkshire Hathaway. And when I had bought it, I think I had paid $82,000 back in 2009, something around that time. And I never sold it. That's all I have. That's it. I always had a dream, and was to be able to go. Different people go on different pilgrimage. A different, to me, I always wanted to go to at least one Berkshire Hathaway meeting, and to be able to do that, you needed to own a stock of Berkshire Hathaway. Hence, I bought it at that time. I think now it's $600,000. I believe that what it's worth. I don't know. I don't really check it, but that's it. I don't intend on selling it. I ideally, deploy my cash anywhere except real estate, because real estate is something I understand a little bit of and understand, and I built everything I have because of real estate. So that's where I focus all my energy. So it depends where you are and who you are in terms of whether you should pay cash or finance. So the way I do it is I pay cash and then I put a loan on the property, meaning a lot of times I'll just buy the properties with cash because today I have the cash. At one time I didn't have the cash. So at that time I did not obviously I had to use financing. But even today, I keep running out of cash all the time because, how much cash are you going to come up with? $1 million, 2 million, 4 million, 6 million? You're going to buy a lot of properties. You're going to run out of capital. And even more capital goes in the operations, meaning you have a lot of construction going on. A lot of the capital, like if you look at my American Express bills a month, right? Most of it goes back into the business. It's not because I'm taking all that money and just living a great lifestyle. It may look like it from the outside, but I don't live a huge lifestyle. Yes, I have toys, I have airplane, all that kind of stuff, but all of it goes back. Most of the expenses are towards the business. So I need to put financing on the properties to be able to continue to grow. So it's going to depend who you are. And then also, are you going to borrow private money? Are you going to do financing from institutions? Meaning, are you going to do hard money type of thing? Obviously, for rental properties for the long term, you're going to probably put some sort of a loan on it, because even if you have cash, why not increase your return by putting a loan on the property so that your cash is out, that's back in your bank account or back, and in your bank, and then basically use leverage, meaning use OPM. So I imagine that as I get probably older, at some point, I'm not going to want to, at some point, right, have as many loans. So I'll just pay a bunch of them down because I can. But at certain point in your life, at this point in my life, it's like the growth process, right? So then why do I want to pay down a lot of loans, even though relative to the amount of assets owned, I don't have that much debt. But so right now, I take loans because I can and I should. I'm not, now, mind you, if you listen to Robert Kiyosaki, you listen to a lot of people that, take as many loans as you can. And I'm not a follower of that. I'm just not. I never have been. I am a little bit more conservative. And maybe because of that, I'm going to have a little bit less money than people who take on way too many loans. But that's fine. It's just my lifestyle, that I want to have peace of mind. That's the most important thing to me. I don't want to have a lot of loans hanging out there and then something happens. My philosophy is this, right? Doing what I do easily, I can get to 50, 100 million. No problem. No problem, right? That's not even a question. So then, okay, maybe I am not at 200 million, right? So then, okay, that's fine, right? I'm good where I'm at. So then I don't push it. Now, there are other people who may basically just go out and put huge loans on things because they're trying to get to that next level. Not that I'm not trying to get to the next level. It's just that I want to make sure I don't get my debt situation out of control in case the economy fluctuates, something happens. I don't want to basically find myself in hot water. That's just kind of what it is. So my appetite for risk is a little bit lower than most people. So that's kind of what it is. Starting out to offset with another business that you have. Starting out to offset another business. Would you have the properties in separate LLCs, or would you have same as the business to lessen the taxes? So this is something that whoever asked this question, it's a great question, but I think you're a little bit confused. So I'll give you guys an example. So let's just say you have, I'll just take me as an example, right? I have a lot of rental properties. I have a lot of Airbnbs. I have a lot of flips. I have the seminars and events that we do, right? So these are different businesses, and some businesses are going to make more money than other businesses. Then there are other years where other businesses, like the seminar business, for the first 2-3 years, I put money into it. It made literally, if you look at the end of the year, right, for the amount of hundreds and hundreds and hundreds of hours I would put into it, it literally almost made no money, right? First couple of years, I lost money. That was just what it was. But I was doing a lot of flips at that time. So even though on the flip side, I had a lot of gains, right? A lot of income. On this side, I had a lot of, not a loss necessarily, but I didn't really make money. But with the rentals, I had a lot of depreciation. At the end of the day, it's going to flow through to you. It's a flow through entity anyways, and it's going to kind of flow up. So it may flow up into a holding company structure like we have today, and then you're going to do your taxes on the holding company end. So one company may have made a lot of money, or you may make a lot of money from your job, but then you may have a lot of depreciation on the other side with some offsets, like maybe it's office building, it's rental properties, it's accelerated depreciation on your Airbnbs, whatever the case may be. I don't know how you do your taxes, but if you, just because you're making a lot of money in one business does not mean that you can't offset it if you have other properties and if you have other other businesses that you're running where you may not make a lot of money, like with rental properties, right? If you kind of do your tax planning properly, you can do a lot of depreciation, heavy depreciation on rental properties, on office buildings, on different types of things. So then that way you don't end up legally paying a whole lot in your taxes in terms of your tax bill. So that's going to depend. And your first question, I imagine now that I read the rest of it, that I imagine you're asking in reference with the taxation part of things to lessen your taxes. So to me, the more financing you put on things and the more leverage you go up, you're going to buy more properties, so you're going to have to pay relatively less taxes. But this is something that you should talk to a good CPA, and you should sit down with an attorney who really understands segregation of assets as well as asset protection, so that you can get proper advice on this. But to me, just because you're making a good amount of money on one business doesn't mean you have to pay an obscene amount of taxes, because you may have some offsets in other businesses. So that's kind of how it is. Next question was, Darius was asking, how do you learn wholesaling the correct way? What do you suggest? So my suggestion, Darius, to you would be is this, that we have a meeting that is coming up. And make sure you go to that meeting when we're talking about off-market properties. Number two, go to the meeting that Blake and Wendy do that meeting in Chicago as a part of Chicago REIA. We do that kind of in conjunction with them, and talk to Blake. he would be a good source that will be honest about if you're going to start with wholesaling, where do you start? There's a bunch of people online I know that talk about wholesaling. The funny part is this, right? They'll show a lot of checks, they'll show a lot of stuff, but yet you never see any of their wholesales. The properties never come up. You never see what it is, and they're like, "Oh yeah, we made," and they'll show you, "Oh my God, we made $100,000, 150." Guys, listen. Does that happen once in a while with wholesales? Yes. Does it happen all the time? Absolutely not. Absolutely not. Absolutely not. Absolutely does not happen all the time. So please, when you get that information, so go to Blake's meeting, talk to him in person. When we do that with him, that meeting is, Lori can actually put it, Jennifer will let you know when that next upcoming meeting is. But make sure you show up to the off-market deals meeting. That's going to happen next week. And we will discuss that in detail in terms of how do you start, where do you start, and then line yourself up with the right attorney, right? So that if you do bumble into a deal, now you have an attorney that you can fall back on so they can help you close the deal. Because a lot of times, just about a week ago, I had somebody that had a property. The property was in Rolling Meadows. And this particular property I'm actually looking at. And this person comes to me, they're like, well, you know, Andrew, I have a property. It's a short sale and I want to wholesale it. And the agent that is involved in this deal says I can't do a wholesale on a short sale. I'm like, well, it depends. He's like, well, what do you mean? The agent said I can't do something. I can't do a short sale, a wholesale on a short sale. I'm like, well, let me take a look at the property. So I take a look at the property, and the bank has approved this particular property for 151. I would pay all day long. I would pay about 182, 185, somewhere around there for that particular property. I have no problem paying that, right? And so I said to him, I'm like, listen, let me talk to the agent, get out of the way. I will send the file to Gina, right? Gina Diaz at Case Law, Diaz Case Law, and let her handle it. And don't worry about how you're going to do a how you're going to do a short sale, but how do you do a wholesale of it? And so we reached out to the bank, and I'm like, hey, is there even a 90-day deed restriction? They're like, no, there's no deed restriction. You just have to close on it, and then you can do whatever you want with it, right? So he's basically closing on the file. I'm giving him the money, and right at that second, we're basically moving it over. He's going to make about $32,000 in that transaction. So I'm like, God bless, man. If you come across a lot of these types of transactions or transactions where you can make money, and he's like, Andrew, so you would actually pay $30,000? I'm like, well, why not, right? The property to me, I believe on the back end is worth about 360, 370. That's what the property is worth to be. Now it needs a lot of work, but I'm like, listen, if I am benefiting from it 100%, and why wouldn't I want you to benefit? Because if you hadn't told me about the property, I wouldn't have found it, right? I've paid wholesalers $50,000, $60,000, $70,000 on properties that I've bought. And I do this for a living, meaning we run this whole thing, right? So I understand a little bit about real estate, but how do I care if they're making good amount of money on the property if I'm still getting it at a fantastic deal, right? I have absolutely no problem that if I'm getting property at a great deal. If the wholesaler makes 5, 10, 15, 20, I mean, literally with just this year, I've bought properties from wholesalers where I've paid 30, 35, 40, 45, 50, up to $60,000 just within this year on one deal. Why not? Because if it's still a fabulous deal for me, right, it would be silly for me to say, oh my God, he's making so much money. How does it matter how much money he's making? If I'm still going to make an obnoxious amount of money in terms of profit on this deal. I mean, this particular property that I'm buying, the short sale, I just tendered the earnest money for it. And I'm putting up about $7,000 worth of earnest money. I know 100% on this particular property, all I have to do is put up about $55,000, and I'd end up making close to $100,000, $120,000 if I decide to flip the property, which I'm not going to flip the property. So just something to think about. So I don't know why I got off on that topic, but I did. Darius had another question. If I'm a brand new investor, how do I find investors for a property? Darius, if you're listening to this message today, right, please, the last thing you have to worry about is finding people who can buy your wholesale deals, right? For everybody that is listening, right, guys, listen, we run something called Mastery, right? And this was number 28 in the last 10 years. Right? So we've done this 28 times. The next event that's coming up is going to be number 29 class. And we have over 1,500 people. As a group, that is the largest group, bar none. Bar none. There's no hedge fund in Chicago that comes close. There is no wholesaler. There's no individual person. There is nobody comes close to the buying power of that group, because that group owns close to 20,000 plus houses in the Chicagoland area, meaning individuals. I was talking about, John Pizzulo and Joanne. Like, they have a bunch of rental properties. I have a bunch of rental properties. Rahul, Farah, all of us, Gina, all of us in that group have hundreds and hundreds of houses. So the last thing you should worry about is, oh my God, if I find a great deal, what am I going to do with it? Bring it to us. We're happy to. I don't want anything from it personally, right? But we're happy to send your information to people that may be interested in your deal. So I have absolutely no problem, because we all want to buy great properties. If it comes from auctions, we're buying. If it comes from MLS, we're buying. If it comes from other wholesalers, we're buying. If we do offline marketing, we're buying. Guess what? The goal for you should never have to worry about, in the Chicago market, 100%, whether somebody will take your deal or not. I promise you, if it's a good deal, we have a buyer from it, and I don't want anything for it. We're happy to basically send you to somebody in Mastery and sell it to them, and maybe a bunch of them will bid on it, and hopefully you can get the highest and best price for your particular property. So if you have properties, please reach out to us, and we're happy to introduce you to a bunch of people that will be more than happy. Go to the 3-day, come to the RIA meetings. And if you have properties that you can wholesale, just the other day, I mean, we have so many wholesalers that are in town, that are in Chicago. They target the Mastery list all the time. I mean, I'm well aware of it. It's not like I'm not aware of it. There are attorneys that are in the market that target that list. Why? Because Mastery people not only can buy these properties, they have the funding. We will back it in terms of them buying the property. As long as the property makes sense, we are more than happy to introduce you. If I don't want the property, it's okay. I'm not the person who will pay the highest amount for the property. A lot of people from Mastery will pay a lot higher than I will. And I'm not open to buying all areas. I'm pretty selective in the areas that I want. Generally, I want A and B areas to keep the properties. I'll buy some in C areas, but that's purely going to be for a flip. I'm generally not going to keep a property in a C area for long term. That's just me. But we're happy to introduce you to that. So please don't worry about, oh my God, I don't have buyers for my properties. So just something for you to think about. Another thing, what I want you to think about is what happens going into next year, because hopefully you've already kind of started thinking in that direction in terms of what happens going into next year. Guys, listen, I don't know what's going to happen with the interest rates. Obviously, nobody does, right? But I was expecting the interest rates to stay here for a while, because clearly the market has still been pretty hot in general. Now, are we seeing signs of cooling down? Yes, of course, right? That there are more properties on the market than there have been. But in the Chicago market, in all the markets where you don't have a lot of new construction, the market has been exceptionally strong. That's just kind of how it is. But there are some signs, and I don't know if they're looking at that. I don't know if they're looking at inflation. They say they look at inflation, and I'm sure they consider a host of factors. But looks like, again, they're kind of starting to ebb these interest rates back. Guys, double down and buy, double down and buy, double down and buy, right? Do not slow down. Now, am I saying overpay for properties? That is not what I'm saying. I have never been a believer at all whatsoever, period, at buying properties at stupid retail prices, right? But you need to double down and buy. Why? Because if you look at all the indicators across the board, every single indicator says real estate market is going to continue to go up. I don't like it, believe me, right? I am not happy when the real estate market is doing extremely well. I am not happy at all. And the reason why I'm not happy when the market is doing very well is because a lot of buffoons jump into the market. That's why I don't like it. And people start overpaying for properties. But if you can find discount properties, buy, double down and buy. And the reason I say that is if these people, again, lower the interest rates, guess what's going to happen, right? In all the markets that we're in, the property prices are going to go up because you basically now, you don't have inventory available. You again lower the interest rates. Guess what it does? Low inventory, more buyers because interest rates goes down. So you're going to have more buyers. More buyers can buy more properties. And guess what? Prices are again going to go up. Now, I'm not saying this is going to go and happen in Vegas. I'm not saying it's going to happen in Florida. I don't know. Like Florida, you have a pent-up inventory of properties. So lowering the interest rates will help absorb that particular properties that are sitting, right, in Florida properties. But if you look at the Chicago market, you look at the kind of the Midwest part of the country, you look at parts of the country that are older markets where there is no inventory of homes that is available, guess what's happening with the prices? They're going to go up. If they lower the interest rates, it is not. I mean, this is the most bizarre thing that everybody on internet and all this kind of stuff, they had Schiller, the gentleman who has that price, the Case-Shiller index the other day, and he's talking a whole bunch of gobbledygook. And I'm like, listen, it may apply to Florida. It may apply to parts of Texas. It may apply to markets where you have a lot of available inventory, right? But if you don't have inventory in a market like Chicago, guess what's going to happen? You lower the interest rates, boom, the market explodes, right? That's why we're suggesting double down and buy. Like in Florida, we're not continuing to build more yet. I have a lot of pieces of land that I still have over there. I don't want to sell it because I know in the long run I'm going to regret it, right? That's why I'm sitting on those pieces of property. The properties that are already built, we're basically trying to get them rented out so that we're set for the short while. And then again, we'll go back to building more. But in the Chicago market, double down and buy. Just please make sure don't overpay for stuff. I will never say that overpay for stuff. If you're not doing marketing, if you're not doing offline marketing, make sure you do that. I said that at the last meeting. That is a budget I'm committing. I'm committing for the first 6 months a budget of $50,000. Now, after that, I may increase it, I may tweak it, I may kind of play with it a little bit, but there are two things that I'm going to do. Now, you may do something different, and that we will talk about at the business planning thing that we do always on, I'm not sure if we're going to do on the 31st December or January 1st, but we definitely will do either a live or a recording of a breakdown of how I'm going to look at it. Because besides the MLS, besides the auctions, which is online auctions as well as the sheriff sales, right? Where else are you going to find properties, right? We're going to do a campaign to wholesalers. 100% this is coming, and you will see me do that everywhere, just like basic for the events we do. We're going to do a heavy campaign for wholesalers. If you're a wholesaler and you don't know what to do with your deals, or you need a place to dispose of your deals, please call us, right? We're going to do that because we want to buy as many good quality properties as we can. Not only do I want to buy it, everybody in Mastery wants to buy it because we want to double down even more in the Chicago market. Why? Because it's so damn lucrative. Having said that, thanks a bunch. I got a Mastery call to do today, so we're going to keep it short and sweet. Thanks a bunch. And for those of you guys that have not, guys, Christmas is over. So half the holiday is gone. Now we're left with New Year. That's it, right? That's one day. That's one evening. Get drunk, but don't drink so much that on the first you wake up with a bloody headache, because you can't start off the new year with a headache and a hangover. That would be stupid, right? So I would suggest, right? I don't drink that much anyways. One glass of champagne, I'm done. So I can't even handle that. But for most of you, right, try that for change this year, that going into year one, and you don't have to go to work on the first. What I don't understand is this. Like, a lot of times people are like, well, Andrew, you're expecting me to work on January 1st. No, I'm expecting you to sleep in on January 1st, right? What do you expect, right? You want to be a multimillionaire with the real estate? Guess what? You're going to have to maybe put your shoulder into it a little bit. So I know we're committed. We want to expand in 2 places. I want to buy more houses next year, and we want to go national with what we're doing in terms of Chicago REIA. Right? Those are commitments on our end. So that means increasing our staffing, hiring more people who are 9s and 10s, in terms of being able to be a part of the business and help all of us grow. The question is, what is commitment for you? So that is the question that we'll come back with, and we're going to do that most likely either on the December 31st or on January 1st. I haven't decided yet, but we will let you know. Again, thanks always for join in, and thank you for all the questions, Q&As, and we will talk to you again on Friday.